Welcome to Ajay Explain Money. Let's see what happened in the market today. Please note, this content is for educational purpose only. We provide news and facts and not financial advice. Always do your own research and consult a professional before making any investment decision. It's the Tuesday evening and the market blast, where Nifty jumps due to the IT stock rally, and today also domestic investor take over the control. Indian market delivered their strongest performance in 2 weeks, with the IT sector staging a spectacular comeback, while domestic investors stood firm against foreign selling pressure. Key highlights from today's session is Sensex surged to close at 81,101, marking a 0.39% gain, and Nifty climbed to end at 24,869, up by 0.39% from the previous close. So both had gained almost 0.39% for today. Now we will see what's the reason for it. The stock fired up with a 2.7% rally. Domestic investor poured an enormous amount of 3,014 crores, beating the foreign selling. And the gold hit a fresh record high, and the rupee stayed under pressure. To give you the snapshot of gold rate, trading at 1,09,010 rupees per 10 grams, and the total FA net outflow is 2,170 crores, and the CVA for today, which is DI net inflow, and they pumped in an enormous amount of 3,014 crores, which shows a strong domestic buying support. Next, we will see the positive news for today. First comes the Infosys buyback. Infosys said, let's consider buyback, and boom, the stock jumped almost 5%, and it alone added 217 points to the Sensex, and it carried the entire market on its shoulder today versus FIA. Meanwhile, FIA kept selling 2,170 crores like they were on a clearance sale. But DI said, relax, we got this, and they pumped in 3,014 crores. Basically, domestic investor became the market savior, saved the market from the selling pressure of FII. What next? Global cues joined the party. Nasdaq hit a fresh high, and the Asian market cheered, and hope of Fed rate cut made everyone feels like bulls are back. Stock-wise impact is Infosys led the charge, rising 5% after the company announced a plan to consider a share buyback. Mahindra gained 2.3%, reflecting renewed optimism in the IT sector. Adani poured advanced 2% on a strong infrastructure sentiment. HCL Technologies climbed 1.8%, supported by the broad-based IT strength, and TCS added nearly 1% as investor rotated into the technology stock today. Let's check on the sector-wise. The Nifty index climbed 2.7%, ending a 5-day losing streak, leading in the market higher. Other sector also added to the momentum, or telecom gained 1.5%, and pharma was up by 1.2%, and FMCG advanced by 0.8%. Meanwhile, banking sector also showed a modest strength, closing with a gain of 0.13%. Clearly, IT was the driver of today's rally. Now we will go into the negative news. On stock market, we see downhill for some sectors, and I will break down it for you. Retail and consumer durable faces a pressure. Profit booking hit high valuations, retail stocks hurt. Basically, investors said, thanks for the gain, now we are cashing out. Adding to that, consumer spending and price evaluation are the major reason for it. Foreign investors are running for 8 consecutive days of selling, with 7,836 records leaving the Indian market in September. The global risk sentiment is clearly visible on this. Rupee weakens persist. The rupee slipped to 88.16 by rupees against the dollar, after gaining 9 paisa yesterday. For business, that's like paying extra for the imported goods. Top 5 losers for today are Trend down by 3.85%. The profit booking in retail hits hard. UltraTech Cement down by 3.20% due to the construction sector weakness. Asian Paints fall by 2.50% due to the weak demand, keep the pressure on the stock. Then comes the Sun Pharma, dropped by 2.20% due to the sector consolidation, and HDFC Bank down by 0.09%. Banking remains range bound, nothing much happening on the banking side. Let's check on the sector wise. Underperforming sector for today are consumer durable down by 1.8%, reality down by 1.35%, auto, which was the top performer last week, was down by 0.5%. As all this sector are facing a selling pressure as investors rotated towards defensive tech stocks today. Now we will look into the global market. The Dow Jones climbed by 0.25%. Investors are whispering, come on Fed, give us the sweet rate cut. Next comes the Nasdaq. Nasdaq hit up by 0.46%. Yes, the tech stocks are still hurting like the no tomorrow. S&P 500 closed up by 0.20%. shows a broader optimism that money might soon get a little cheaper. Next, let's check on the Asian market. Japanese snake rose 0.27%, boosted by hopes that political transition will be smooth, and the fingers are crossed. Hong Kong Hang Seng market jumped by 1.04% thanks to the expectation of more stimulus from the China. Next comes the Europe. Europe was far behind. The UK FTSE 100 gained by 0.20%. German DAX ticked up by 0.15%, proving slow and steady really does wins the race. Now we will see the big picture. Nasdaq record high or green light for Indian stock. Good news for our tech sectors. Asian Pacific market are showing a broader gains, fueling the risk on sentiments. But beware, dollar is flexing its muscle, keeping the emerging market currencies, including the rupee, under the pressure. So in short, Wall Street is smiling, Asia is hopeful, Europe is steady, and the dollar is basically saying, I'm the boss. Let's wrap up the video with a summary. And here we will discuss on the key takeaway and the risk for the upcoming market. 3 takeaway for today's or IT sector staged a big comeback with the Infosys buyback announcement. Next comes a domestic investor stepped up pumping in a 3014 crores when FIA pulled out 2170 crores. And the Nifty reclaimed its 100-day moving average, setting up what looks like a technical breakout. Traders now have a 25,000 on their radar. Alright, time for today's test checklist. First up, FIA selling pressure. Foreign investor pulled out another 2170 crores. That's 8 days of non-stop selling. Second, currency weakness. The rupee slipped to 88.16 against the dollar, and when the rupee weakens, input get costlier. That means higher inflation. Third, the global data dependency. All eyes are on the US inflation number coming out on September 11 to 12. Why? Because those numbers will heavily influence the Fed's decision about the rate cut on September 17th. In short, whatever happens in Washington won't stay in Washington. It will shake market everywhere. Thanks for watching the video. If you found this briefing helpful, smash the like button, share it with your fellow investor, and don't forget to subscribe. Please provide your valuable feedback in the comments.